5 right now. Alan Uckman joins us for some market thoughts and a trade this morning. He's the chief market strategist at bullseyeoption.com. Alan, we going to get that 6,000 before the election or before the Fed in September or what?
It doesn't matter. We got a hot market, and we've got earnings starting here this week. So this is going to be the next catalyst. What are we expecting? 8% earnings growth for the quarter. So stocks are hot. There's no question about it.
When we look at the VIX at 13, we're gonna hit back to 11 lows. What's the kind of environment for complacency or melt up or froth that you see?
Well, what I'm looking for is the earnings are obviously going to support of how well corporations are doing. And to talk about JP Morgan, tell me an environment in which they don't make.
That's kind of my point. Yeah.
Yeah. How many billions of dollars per quarter free money? So, it is what it is. They talk down their game a little bit. I think to not appear to be, glomming, and being greedy. So, I mean, they're doing well. I don't think there's any tears that need to be shed. But I think the dollar index is the big deal. The dollar index back below 104 will get things started for a lot of stocks. And I think that's going to be very much a positive.
Yeah, you've mentioned the dollar several times on our occasions. Dollar's been generally hanging in there, but last week got blasted pretty hard, all week. I know you like the charts more than you do the news, but any thoughts on why the timing for the dollar pullback?
I have no idea. I'll be the first one to tell you that, but you can see how it's been not higher for longer, but here for longer, just like rates. And eventually that dam is going to break. It's a very crowded trade, and you know how those usually end up. So, people that are, short the euro currency, a push for 109, 110 can really get that thing started. And that's that could change the whole sentiment and the whole focus of the markets as well.
Yeah, I'm with you there. Dollar's been pretty firm throughout even some of the fluctuations lower in bond yield. Mm-hmm. So to see the dollar now join yields kind of on the lower end of the range.
But again, I'm going to say it 150 times. I've been doing this for 30 some years. The last 40 years, the dollar's been between 120 and 80. So 100 is essentially the midpoint. Yeah. We're not high. We're right close. We're almost to the midpoint. So there's a lot of potential there. And, because it hasn't done it yet, it's just potential for right now. But that's what I'm looking at as the path of least resistance.
Got it. All right. Hey, you're going for a stock down in the dumps. A lot of people have a lot of bitterness with the one and only Pfizer. How come? What's going on?
Well, I'll add to that bitterness with my strategy. Okay. This is my second dose of Pfizer. We went after it in January. Okay, we bought the June 25 call, which was in the money. Yeah. And guess what? It ended up finishing right at about 29. So it was at break even because we buy in the money options. We bought it for 4. It was about 4 when we finished. Okay. Now, as a trader, Ben will be the first to tell you, some of our best trades are ones that you scratch on. You don't make money, you don't lose money, but you were there for that opportunity window and it didn't cost you anything. So it's set up once again. We didn't buy enough time in that particular instance, but we didn't lose any money. That's why I trade the options that I trade. I can't stress that enough. So for this, I'm looking at a January call, the same 25 strike, the same setup that I saw before, where we're seeing a range between 25 and 30 now for 8 months, and a breakout of the range targets 35. 25 is super support. 25 is the 10-year plus low that we've seen in this stock.
Yeah, it is quite low. I mean, it hasn't gotten any love whatsoever. Even Moderna's been trying to bounce back because all these other health companies like Eli Lilly have just taken the world by storm.
Right. It's risk reward. And if you look at this stock is a actual Dow stock, which, is only 30 stocks. It's not that relevant. But, you can't ignore that. And it's been down 20% in the last 52 weeks, whereas the Dow has been up 15%. So you've got risk reward, you've got leverage accumulation, you got the fact that it made new lows and rejected those lows recently. And again, those were 10-year plus lows at 25 and then it bounced. So there's a lot of positives here. I'm looking at the 25 call for January's cost about $3.75 right now. With the stock at 28, it's $3 in the money. So the expiration break even is 75 cents above, and it's only $25 more expensive than the October option. So I'm buying more time than I need to be in position for success for this stock.
All right, so vol, it seems like it's pretty affordable, pretty
Right.
cheap in Pfizer if you can get an extra couple months for not much extra cost. So you got plenty of time for it. You're looking for it to get above the highs for this year. That's the trade, because that's the high at like $30. Your break even at 29.
Right.
You needed to get it a year-to-date high.
Well, yeah, we needed to get, if it just moves modestly, again, we're at 28. So a modest move here can produce big gains. So if we get to 35, which is a technical target, which is still significantly off the high highs, we're 50% off the 2022 highs of December. So, if we just get to 35, which is, not that significant, the option's worth 10 and it's up 150%. So it's about the math. It's about the positioning. It's something that I'm very comfortable with. All the stocks that I've already taken off, the risk reward on this stock, nobody likes it. And you know how that attracts me to the stock like a moth?
Yes,
I guess.
that's it. All right. Self-described. Thanks. You should change your service to the Mothman prophecy.
The Mothman. Yeah, that's good marketing. Yeah, I'm gonna. You want to be a consultant? Okay, good marketing.
Give me that kickback. All right, thanks, Alan. Chief Market Strategist, bullseyeoption.com. All right, trading Pfizer with the in-money call. Looking forward to get to a new high, year-to-date high. When we come back, let's talk some ETFs. We're going to take a look at themes that have been working here in the U.S., some that are working around the world, follow the flows to get some ideas. Might even dabble in a little crypto, because there's still a rumor out there that we might get one more crypto ETF